dive right into a trade ideas for what we're looking at for this week coming up January 6th all the way through the 10th. Today is Sunday, tomorrow is Monday. So let's get into what I'm eyeing. And I already did a checkup for what I'm looking at. I'm gonna show you guys how I do my charting, where I start from, and what I'm eyeing for tomorrow. So I am a little bit bullish on the S&P500's. And today we're only gonna look at Apple and SPY and maybe one or two others, but really just Apple and SPY is what I'm looking at for tomorrow, and somewhat Amazon. But let's get right into the SPY. So SPY on the weekly time frame, what I like to do when the week ends is look at the weekly, see where we moved, and you guys can see we really are just continuing on to the upside, higher lows, higher highs. So we still ultimately are on the uptrend, continuing on creating higher highs, higher lows. Ultimately, that's what I'm looking at. That's what I'm seeing. You can even see even higher highs as well. So we're continuing are creating higher highs, higher lows. Now, of course, those aren't perfect trend set spots. I'm just showing you guys. Generally, we're still creating, somewhat going higher highs, higher lows. Now, on a weekly time frame, after this big, strong bullish breakout to the upside, we did pull back here on this red candle, then another break and continue on for some more higher highs. Then again, another big, massive FOMC type of day pullback, which was on Wednesday. Long wick to downside. And then here we are with this strong weekly candle. Now, the reason why I like this candle here is because of many things. Not only is the volume very strong, guys. You guys can see the volume is very massive, a decent amount of buyers. Now, if you compare it to the most previous amount of buyers, you guys can see that the only amount that it actually surpasses is these ones here. So it does surpass the weekly buyer volume between these buyers on these weekly time frame candles. It's not as strong as these over here. As you guys can see, these candles, as far as the volume, was very strong. So I'm just showing you how my mind thinks, because I'm looking at the buyer volume here. It's at 190 million. Now, if I just put my cursor as flat as I can to 190 million buyer volume, you guys can see that over here, we have surpassed over 190 before, and market has continued on to the upside. So I'm just showing you guys that to show you guys how my brain thinks and what I'm looking at. So I'm noticing that the buyer volume is pretty decent. It's decent. On top of that, this is a hammer candle here, right where we long wicked to downside before. Plus, this is some general support here. This is a decent general support area. Now, the reason why I say that is because look at the price action candle, guys. Every time we hit this general area, it either rejects, and in this case, we got a nice break above for buyers, then comes down to test the support. Here we are again, FOMC, long wick to downside, and here we are again holding this general area. Now, let's go down, and before we even go down, let's throw on some technical analysis. Let's throw on some indicators. Now, I don't really like, so now we threw on some indicators here. Now, I don't really like using indicators or necessarily advise anybody to rely on them 100%, just because I see that the 20 SMA is riding along, and here we are, long wick to downside, hammer candle, decent buyer volume right on the 20 SMA. It doesn't necessarily mean that I'm gonna buy calls right at open and expect for the whole next week to be straight bullish. That's not what I'm saying. All I'm doing is finding out that potentially buyers might step in and we might bounce here for this next week coming up. There might be a potential bounce here this week coming up. So what I will be looking for is some call setups. So I'm starting on the weekly and I'm noticing long wick to downside, hammer candle, buyer volume stepping in, decent amounts. Here we are on the weekly time frame, right at this general support. Plus we're right here on this 20 SMA. So there's a potential bounce here that this might just be a pullback to the downside before we continue up to some more higher highs. So that's the weekly time frame. Then if I go down and delete all these studies and just go down very simply to the daily time frame, you guys can see here we are in that general area. Now, SPY isn't really anywhere in the general area where I would love to be confident in a specific position. But you guys can see when I grabbed that quick little range of general support, all I did was grab the wick of that one weekly high and the wick of the weekly low over here in this general area and just extend it out. And here we are, bouncing in this general area again. And I'm not saying we're going to officially bounce, because look at these candle guys. The price action here has been horrible, very ugly. The daily time frame does have a decent amount of buyers here. You guys can see on the volume. It's decent. It's not crazy amounts, but just follow the price action. Read these candlesticks. We rejected this most recent resistance area that I had that at one point was support. Then we broke down below an FOMC, bounced on the support, rejected that area again, bouncing here again. So who knows what's really going to happen. Now here we are on a 4-hour time frame. Again, guys, all I'm doing is following price action, looking at the trend. Now, if I throw on my actual chart, which is all this crazy nonsense, all I'm doing before I actually show you guys what I'm looking at and what levels I'm trading is just showing you guys how I look at price action. Look at this, bounce at the support. Then over here, I remember trading this area all day. This was a crazy week to trade. Then FOMC hits, immediately sells us back down to the support area, which if I throw on my actual chart, you guys can see it's a perfect nice bounce on this little zone, bounce on this zone support. Then we ultimately rocket back up to where we rejected, to where we lost in FOMC. Here we are, rejected that general area. Let me zoom in a little bit so you guys can see what I'm talking about. This big red zone is where we lost in FOMC. It was a nice support here when market was creating all-time highs. Then we lost that level. Market tries to do its absolute best to bounce here, and we do kind of get a bounce. Then again, we retest this general area. coulda, woulda, shoulda swung some puts here because they would have paid. Then again, here we are back in this general area. So on the 4-hour time frame, guys, we're not really going much anywhere. 4-hour time frame, to be very honest, we're kind of still sideways generally. Because look at this action, guys. What is this horrible action? Every time we hit this general area, it kind of just chops around here. Now, I do have a level that I'm eyeing for tomorrow. And let me show you guys that here. So let me delete this and show you guys that all I'm looking at for tomorrow is I like to take breakout trades. Now, before I show you guys and deep dive my levels, I want to show you guys what I'm eyeing before I show you guys all that nonsense. Very simple. I'm a very simple breakout trader. Reason why I call myself a very simple breakout trader is because if I wanted to grab the resistance of this general area, the high of that wick, and maybe grab the high of that wick, I can see that SPY is doing its absolute best to break out here, and this was Friday. So here we are on Friday, kind of rejecting, but we're still generally here. Now in the pre-market, if I see us holding this area, then I do expect us to keep on holding and potentially break to the upside. Now, of course, if that never happens and market and the pre-market tends to break below that support and not hold it again, and I'm thinking that, you know what, we're just gonna go back to chopping again. But I'm eyeing for tomorrow, guys, very simply is a break to the upside of Friday's highs. Now, I do have Fibonacci retracements on perfectly to the T. I mean, guys, you cannot get any better than this. It's only 3 cents away from this Fibonacci retracement level. It rejected on Friday. But with that being said, guys, all I'm eyeing for tomorrow or Tuesday or Wednesday, whatever day that this happens, if we get a break above this 23%, 23.6% Fibonacci retracement level, I'm in calls, which is 592.63, which really is just Friday's highs, which is 592.60. But if we can get above this general area, I'm going to risk it for the biscuit. I'm going to risk it for the biscuit and take calls and take longs above this general area. As soon as we get above this level, I'm taking calls here. I'm going to risk it. First price target, of course, is going to be this high right here. So although the main price target is way back up here, but the first price target where I'll start scaling out some contracts is this most recent high over here, or we can even target this general area over here for the first price target to sell off some contracts. But you guys can see my stop loss is very small compared to my win ratio. Now, of course, if I can unload some contracts here at this general area, maybe I'll set my stop loss at entry or in 10-15% profits. But either way, this is the type of risk reward ratio that I'm trying to find. I'm trying to find a high risk reward ratio type of setup. So if I enter longs here or call out a signal trade to enter longs here, I want to make sure it has a lot of room to run to the upside with a very small stop loss, maybe a 15-20% stop loss, whereas my risk reward ratio is a 50 to 60% gain. Just like how last week our trade was a 50% gainer. So this trade right here could easily pay us above over 50, 60, 80%, where the risk reward ratio or the loss might be 20, 15, 10%. You can adjust this depending on your stop loss or risk reward ratio. But in my case, I'm trading the chart, not the P&L. So with that being said, guys, that's what I'm looking at for SPY. Now that's why I'm a little bit bullish starting from the weekly, going all the way down to different time frames to I want to take this breakout of this upside because market does look decently bullish. So if we can get in the pre-market or in the pre-market, if we can hold this general area and we get a nice breakout above this level, then best believe I'm going to be entering in some calls. I do not plan on taking puts even if we reject the support here. Even if we reject the support here, the reason why I don't plan on taking puts is because of this, guys. Yeah, maybe I can collect a nice 10, 15, 20-ish%. It can easily catch a support right here. It can easily catch a support right here in this general area because of the most recent price action. But the reason why I'm not eyeing puts there or in general anywhere here is because I'm trying to take a call to the upside. Now, if I never get that breakout to the upside and we start trending downwards, I'm not going to chase puts. I'm going to wait to get into puts until we break specific areas to the downside because I'm a breakout trader. I want to take a trade on a breakout like this, where you guys can see every time we hit the general area, it rejects. But this time, if we don't reject and we break out, it's going to be a fat trade. Whereas if I take puts here off this little break of support, who knows? It might catch a support anywhere in this general area. So that's how my mind thinks, guys. I'm a breakout trader. Very simple. Market weekly already looks pretty bullish. So I already have my weekly buy setup. I'm a little bit bullish. If we can get a break above this, I have my call setup, and that's pretty much my call setup for SPY. Now, all I did was zoom out on the 4-hour time frame. As you guys can see, this is that breakout area right here on the 4-hour time frame. Now, this is the 4-hour. Mind you, guys, this is what price action looks like on the 4-hour. So again, FOMC day, big sell-off. Bounce at these two supports, comes back to reject that general FOMC support area. Then here we are kind of just chopping around. It's not really doing much. So just be careful trading SPY because SPY isn't really anywhere to be too confident in a single direction. It has to get above, for me, above this general area or 23.6% fib, which is 592.60 for me to take calls to the upside. And in order for me to be confident in puts, we would need to lose 582.60 or this general area or even this general area for us to be into some puts. So that is SPY on the 4-hour with all my levels. Now, let's break down Apple, guys. Apple is in a very simple area. I know it can look a little bit cluttered, but all I did was throw on some fibs. But let me delete the fib to show you guys what I'm looking at. So this is Apple. Apple looks very simple. I know I had a lot going on and my charts look pretty crazy there, but this is just Apple on the 4-hour time frame. Now, Apple had a nice run. I was watching Apple for months now, guys. I've been watching Apple in this tight trend. I caught Apple calls on the break here, and then we decided to range again on the 4-hour time frame, because on the 4-hour time frame we get a nice break above and then we start to range again. Break, range, break, range, break, and again, guys, range. Here we are. Break, range. Look how many times we broke and ranged, broke and consolidated just for a little bit. But then this time, what's going on? Broke, big sell-off to support, break, retest support, break, again, fell off to support, fell off even more to support, broke this put level that I had, because I'm eyeing this put level, guys. I'm eyeing this level for puts. The reason why I had this put level here is because it's very simple. Look at the support here. If you break this support, where's it going to go? If you lose this support, it has only room to go down to some more. Now, after we lost that support level and I didn't manage to catch that, here we are, guys. This is why I'm not going to touch Apple, because look at where Apple's at. Apple, if you look at the most previous price action, it's just in this general area of support. So you need to wait for Apple to get out of this general area before you take another trade on Apple. I wouldn't take Apple trades anywhere in here unless we get a break either below this support again for some more downside action, or until we get a break above this most recent area for some more upside action as well. Now, all I did was grab a Fibonacci level all the way down here. If you watch my video, you'd understand how to use Fibonacci retracements in your favor and grab the highs there. So I grabbed the lowest point there, grabbed the highest point here. I'm not gonna dive too deep into how I did that. But now let's go on a lower time frame and show you guys where I actually plan on taking calls on Apple tomorrow. Because I plan on taking calls above 38.2% fib level, which is this area. And you guys can see every time with this general area, it actually rejects. So if we can get a break above, then I'm gonna take calls. Now, some people might be asking me, why aren't you going to take puts if we hit that area? Now, the reason why is because SPY looks pretty bullish. Plus, if market gets bullish, or if market momentum tomorrow is bullish, then definitely I'm going to take calls above. I can take a trade setup and say, you know what, if we reject, I'm going to take puts, target Friday's lows, and maybe you can catch a nice trade like that. But I'm a breakout trader, so if we can catch a nice breakout to the upside, then I'll take it. Don't get me wrong. You can maybe create a quick trade setup like this and say, you know what, maybe you can take a quick trade setup to the downside like this on Apple and say, you know what, every time we hit this general area, it does seem to reject, so I'm going to take puts again. But if market's bullish, then I'm going to wait for us to get to the upside, and I'm going to take a break above this general area, because I'm a breakout trader, guys. Again, if we break out this general area where we like to reject, if we break out above, I'm going to take calls. I'm a breakout trader. Now, of course, we can catch a reject anywhere. Maybe first price target might be here. Who knows? I'm just gonna be watching price action, guys. So that's how I do my charting. That is how I do my ideas. That is how I look at the market. Now, of course, I didn't dive too deep into Apple because I didn't want to spend another 15 minutes breaking down everything. But you guys can see on the 4-hour time frame on Apple, it's very simple. We're just in this general support area. We lost a lot of these support levels on the way down after a nice strong climb to the upside. If we get a break above this general area, then yes, I'm going to take some puts or some calls to the upside. But if it never happens, then it never happens. I do plan on taking puts below this support, maybe even more below 50% fib for some more downside action. So that wraps up for today's video. And guys, remember, Discord is free. Join the free Discord. All trade ideas, everything is in here, all the sauce. I mean, come on, you get a lot of sauce for free. Economics tabs, earning reports tabs for which companies are reporting, and so much more, endless amounts. So make sure to join this Discord where we talk constantly. And I hope you guys enjoyed this video. I know I kind of did ramble on a lot and went through a lot of stuff pretty fast, but I hope you guys were able to catch up with this stuff and catch you guys on the next video. Remember, Apple calls above and SPY calls above specific areas, and we're going to take calls. If we never get it, then we don't get it. Let's have a safe trading second week of January, and let's kill it, guys. Let's keep going.